Today we're diving into a company that's quietly outperforming and still under the radar, Ero Copper. With record earnings, low-cost production, and direct exposure to the copper supercycle, this might be one of the smartest risk-adjusted commodity plays in the market right now. Let's break it down. First, the Q1 2025 numbers are in, and they're impressive. Revenue came in at $125.1 million, up 18% year-over-year. Net income surged to $80.2 million, or 77 cents per share. That's a major beat, even by bullish expectations. The profit margin? A staggering 64%, thanks to tight cost control and rising production. Now here's where it gets interesting. The company's flagship project, the Tucumã mine, reached commercial production in March. That's huge, because Tucumã is expected to become Ero's biggest copper contributor, and it's already delivering over 50% of the company's total output in just one quarter. Adjusted EBITDA was $63.2 million. And with over $116 million in cash on hand, plus conservative debt levels, the balance sheet is rock solid. Liquidity's not an issue here. Ero has both runway and flexibility. Let's talk valuation. Ero is currently trading around $15.80 United States cents, near the lower end of its 52-week range. The average analyst price target sits between $24 and $26. That's a 30 to 40% upside from current levels. But if we model in full-scale production and higher copper pricing, that upside expands dramatically. Forward EBITDA could hit $250 million annually. If the market gives it just a 7x multiple, you're looking at a $30 to $35 stock. And if copper enters a true bull market, driven by electrification, AI infrastructure, and grid expansion, that number could go even higher. But let's not gloss over the risks. A global copper demand slowdown, especially from China, would hit sentiment hard. Execution missteps at Tucumã would weigh on earnings and credibility. And any shift toward high-cost M&A would be a red flag. So far, though, management has stayed disciplined. What's next? All eyes are on the Q2 earnings in late July. If they confirm sustained production and cost control at Tucumã, Ero will likely get a re-rating. Also watch copper pricing trends, especially tied to Chinese stimulus, Fed rate direction, and global manufacturing PMIs. Bottom line, Ero Copper is executing. It's profitable, growing, and cheap. If you believe in the copper supercycle, you might want to own this before everyone else catches on. I'm watching it closely, and maybe you should too.